Hello and welcome everybody to today's very special training. Today we'll be talking you through how to trade the Commodities Santa Rally presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be covering the big end of year trading opportunities, key fundamental catalysts that can impact commodities at this time of year, how to identify and profit from major trend reversals, live market commentary and technical analysis, and we'll also be identifying highly profitable trade setups on the commodities. So first of all, the key markets that we trade on the binary.com platform, those include metals, so we trade gold, silver, palladium and platinum. On the energy side, we trade crude oil, and we will be having a look at all of these markets today during the session. If you do have any questions or comments, do post those into the comment section, the chat section there, and feel free to send those either directly to myself or Sharice. Okay, fantastic. So first of all, let me introduce you to the Gold and Silver Club. We are an international commodities trading research and advisory group. We specialize in the precious metals, the energies and the agricultural markets, and we are recognized as the leading go-to authority on commodities as internationally respected experts. Our analysis and our opinions on the metals, energies, agricultural markets are routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, Global Banking and Finance Review, and the Wall Street Journal. Our team of experts has advised and taught technical analysis, fundamental research, and portfolio management to more than 75,000 private and institutional traders worldwide. For more information on the Gold, of course, do go across to www.thegoldandsilverclub.com. So first of all, today we will be talking you through the Santa Rally. So I'll start off going through the seasonal events that really influence commodity prices at this time of year. One of the biggest influential factors right now is going to be the US holiday season. So tomorrow it is Thanksgiving in the USA. On Friday it is Black Friday, where you see retail sales across America and in fact across the UK and Europe these days, and also Cyber Monday. So this is a huge time of year for the retail market, and we want to watch very closely the headlines coming out of this, the consumer spending, the retail sales. If we see that above expectations, it will be positive for, particularly in the US, be positive for the US economy, and we can see strength in the US dollar and the US stock markets, and essentially weakness in the commodities. However, if retail sales come under expectations, we could also see weakness in the US dollar, which will have an inverse relationship with commodities such as gold, silver, platinum, and palladium. So we've got an important few days coming up. Now, we are likely to see some reduced volatility in the market tomorrow. It is the US bank holiday. There are no major announcements coming out of the USA on Thursday or Friday. Then as we go into Monday, we've got an action-packed week on Monday, particularly from Monday onwards. Particularly, we have next Friday, we have non-farm payroll, and we also have the OPEC meeting, which is very important for oil. So this time last year, when OPEC delivered the announcement that they were going to keep their levels of oil production unchanged, we then saw a huge drop in price, 1,400 points to the downside. So you definitely want to have that on your radar next Friday. And then we're going to be moving into the time of year for the FOMC, which will be on Wednesday, the 16th of December. So some big trading opportunities coming up. So first of all, I will talk you through Black Friday and how we take advantage of that through the Santa Rally as well, and then how we position ourselves as we move into major news announcements too. So first of all, Black Friday and Cyber Monday. Black Friday sales, it marks the start of the holiday season in the USA. Department stores across the US, they open their doors at midnight, offering consumers the so-called door buster deals. And according to the National Retail Federation, they estimate sales in November and December account for almost 60 to 70% of annual retail sales. Okay, so it's a very important time of year for the retail sector. Overall, during the final period of the year, consumer spending and retail sales surges to record levels. So we often see this, and typically it's viewed as bullish for the US dollar, bullish for the US economy, and bearish for precious metals, which trade inversely to the US dollar. So very important time of year. I'll show you some examples from last year's US holiday season trades from our own private traders club, just to give you an idea of some of the moves that we got. So what we saw last year was a big surge on the US dollar, so a US dollar, and subsequently we saw a nice sell-off on gold. So gold break down quite significantly around this time of year last year. So that is a lovely inverse correlation that you want to look out for, and that's exactly what we will be looking out for as we head into the Black Friday, into Thanksgiving tomorrow, Black Friday, and also Cyber Monday. We will be looking out for a potential further dip in the metals and a rally in the US dollar and also the US stock markets. That is one to keep a lookout for. I will talk you through the technicals very shortly because it's actually good timing, because right now gold is sitting around 5-year lows. Silver's sitting at 5-year lows. We've seen platinum again break down 5-year lows. Palladium sitting right at key support. So it wouldn't take much for another surge higher on the US dollar in order to break the support of these metals and see another sell-off until we come into next week, which is the beginning of the Santa rally. What is the Santa rally? The Santa rally is a rise in commodity and equity prices often seen over the final few weeks of trading prior to the new year. Now, the rally, it's caused by fresh funds into the market, so bonuses from Christmas, holiday optimism. So, of course, we're coming into this holiday season now as we've got the run-up to Christmas. Traders are taking additional trades for accounting and tax purposes to be completed by the end of the year. So this overall impact on the markets is known as the Santa rally. However, there is a very important point that you need to know for the Santa rally, is the Santa rally will only last until the 16th of December. Now, the reason being is that the 16th of December is when we have the FOMC statement, and that will be a major decider for the market. So especially if we have an interest rate hike. So Wednesday, the 16th of December, this is when you'll start seeing a lot of traders closing out of their position because we really don't know what the FOMC are going to say. There is a lot of expectation that there will be an interest rate hike in December, which will have a big impact on the US dollar, will have a big impact on also the precious metals. But if the Federal Reserve do not, if they don't move forward with an interest rate hike, that will have a big impact on the precious metals and other commodities to the upside. It would definitely impact the US dollar in a negative way, and we would therefore see a continuation of the rally. So the 16th of December is very important. So the way that we will look to take advantage of this is over the next couple of days, particularly from we've already got sell shorts on the metals that we've been in from last week anyway. But at the moment, we're looking to take advantage of a bit more downside between now and the end of the week as we go into Thanksgiving, Black Friday, Cyber Monday next week. Then Tuesday next week is the 1st of December, and that is the beginning of the Santa rally, where we want to start protecting all of our trades and looking then to start reversing positions as we start to see the markets. They tend to bottom out around this time of year, beginning of December. So let me show you an example of last year's moves that we saw right at the beginning of December, okay? So gold, a huge move on the first, this was the very first day of December last year. We saw an 800-point move. This is on a daily chart, an 800-point move in one day, okay? So it's taken gold about 3 to 4 weeks to break down 800 points. If you can imagine an 800-point surge in one day is about 4 to 5 times gold's average daily volatility. So watch out for it. 1st of December, this is what we saw last year. Platinum moved 650 points to the upside in the first week of last year. That was a huge move. And also silver had a big breakout, a 250-point move. That was actually on the 1st of December as well. So a 250-point move to the upside, which again is 5 to 6 times silver's daily volatility. Typically, silver moves about 30 to 40 points a day. So you can imagine a 250-point move would cause such a big breakout to the upside. Now, I've been looking at the reports from the CFTC, which gives you all the speculative, that gives you all the net positions of the banks, the hedge funds, all the big boys, the big players in the market. And we have record sell short positions on the commodities at the moment, okay? So in terms of where the big money is, the hedge funds, the banks, where they're positioned is for big sell shorts at the moment on commodities. So what does that mean? What it means is if we get a sudden rally to the upside, a lot of stop losses will get taken out and we could have a very severe snapback to the upside. We could have some really huge percentage, 5-10% moves within a week, much like we saw last year. So keep an eye out for that. I expect when gold, when silver, if we do see these markets rally, they are not going to go slowly and build up a bit of momentum and give you a chance to easily get in. It will probably be one day, a huge move. Keep a lookout for it next week. It could be the 1st of December or certainly some point next week. It might be non-farm payroll next Friday, but just be alert to this. We'll suddenly get a huge move, and if you haven't got alerts set up, if you're not in front of the screens or you're not aware of what this potential move could be, you will miss the entire trading opportunity. So just have that on your radar. So that is the Santa rally. That is what we want to look out for. So this is the seasonal chart, seasonal events over the last 32 years for the gold market. And I'll focus more on the gold market because it works out very well year in and year out. We see the same correlations play out in terms of the seasonality trends. So we've just come out of the October FOMC statement where we're seeing quite a lot of momentum to the downside. So typically you can see here previous years, this is very typical, and I'll show you on the chart very shortly actually the October move. So October was a very negative month for the gold market, and that has just followed through in terms of the seasonal trends as well. You always tend to see a pullback in October following on from the FOMC statement that's happened the last 2 years in a row. We've seen significant sell-offs. Now, at this point right now, we are getting to a point where you would expect the gold market to start to bottom. So as we get right to the end of November, this is a point where we do expect the market to bottom, start to form a base. Certainly we're starting to see palladium is forming a bit of a base here. Palladium is actually leading the metals to the upside right now. Copper is also forming a base. Gold could still have another breakdown lower. Silver is currently sitting around key support at the moment. So we are anticipating potential breakout now as we come into Thanksgiving. Well, actually next week will be the key week from the beginning of December. As we pass through Thanksgiving, Black Friday, this is where we're anticipating the rally. And then you can see here, this is typically where we get the rally as we begin December and we really start to kick off to the upside. So that is the seasonality chart over the last 32 years that you want to pay a lot of attention to. So what can you be looking out for? So what do you need to keep an eye out for a major trend reversal signal so you can take advantage of a potential breakout to the upside? Now, bear in mind that the commodities have all sold off significantly. They're at 2015 lows, they're at 5-year lows. And this is a time of year where typically you would expect reversals in the market. So what do you need to look out for? You need to look out for very key levels initially of support and resistance. So this is a very basic. This is just a reminder for everybody. I'm sure everybody is aware of support and resistance. If not, I'll explain right now, and it's just a refresher for everybody else. So resistance is a level where buyers find sellers. It's typically a ceiling in price. Support is a level where sellers find buyers. It's typically a floor in price. The bigger the time frame, the more important those potential support and resistance levels come. And you just want to draw those in on your technical chart. You want to zoom out to daily, weekly, monthly charts. Make sure you've got all the key levels. And then you look at the support zone for event areas for buying, or if we break a key support zone, expect it to be a decent sell-off. And it's the same with the resistance. You're looking for opportunities to sell around those zones unless we get a breakout, in which case you're looking to take advantage of a breakout trade to the upside. Now, the other key point here, which really leads me on to trend reversals, is you want to have this on your radar. This is a bullish V-shaped reversal pattern. Now, bullish V-shaped reversal pattern occurs in a downward trend, and it often signals a trend reversal. So the neckline of the pattern is formed by the highest point prior to the formation of the V. So what would this look like in a technical setup? We got an example here. So you can see here we've had quite a significant sell-off on the market. We've then had a rally and we've formed a nice V-shaped reversal pattern. All we want to do is break the neckline of resistance here to get good follow through and good momentum back up. So it's often what you get when a market bases. We're getting these sort of formations forming on oil at the moment, and we'll take a look at those very shortly. I'll show you what they look like. But this is essentially the sort of breakout you can anticipate. It's a breakout on gold here, where you've had a huge breakout after the V-shape, the top of the V-shape reversal was breached. Now, another example would be a bearish V-shape reversal pattern, which you can utilize when markets are starting to top. We had one of these recently, again, on the FOMC statement for gold. The V occurs in an upward trend, often signaling a trend reversal. This time, the neckline of the pattern is formed at the lowest point prior to the formation of the V. Again, another nice example for you here. V-shaped reversal pattern formed after we've had a breakout to the upside. We've come all the way up, we've rallied, produced an inverse hammer, come all the way back down. Then we produced a neckline around 570, and you can see what happened next. Broke down significantly. So once we got a break and a close below that level, we really started to break down all the way back to the lower end of the supportive channel. So keep a lookout for those V-shaped reversal patterns. We'll have a look at that technically very shortly. Now, that is the Santa rally and what we can anticipate now at this time of year as we come into Thanksgiving tomorrow, Black Friday, Cyber Monday. Now, the other big opportunity that I really don't want you to miss is the December FOMC statement. We have huge moves on the December FOMC statement. We've had big moves most of this year on major FOMC statements. If you don't know what that is, essentially it's the Federal Reserve, and Janet Yellen will be providing the statement, then doing a question and answer. Janet Yellen has more influence over the US dollar's value than any other person. Her speeches are followed very closely by traders and usually present very lucrative trading opportunities. Now, the December 2015 statement is going to fall on Wednesday, the 15th of December, okay? So have that written down, write it down on your notepad, write it down on your phone, write it down on your hand if you need to. Wednesday, the 15th of December. Don't miss that date. Okay, that is going to be a very important date. In fact, it's a 2-day FOMC meeting, Wednesday the 15th and Tuesday the 15th and Wednesday the 16th. The actual statement is released on Wednesday the 16th of December at 7 o'clock London time. So have that again. That is the major date, the 16th of December. We'll be trading it live at the Private Traders Club with all of our traders. If you would like to join us trading that live as well, I will talk you through that towards the end of the session, how you can also get access to us trading that FOMC statement live. I'll give you some examples of previous FOMC statements from our Private Traders Club. So this was the FOMC statement going back to September 2011, where the Federal Reserve surprised the markets and did Operation Twist. Silver dropped 700 points in 24 hours. Now, remember, how much does silver move on a day-to-day basis? It moves about 30 to 40 points per day. A 700-point move in 24 hours was unbelievable. Absolutely huge move on the market. That's almost 20 times its average daily volatility of that statement. Okay, so very powerful news announcement. September 2012, the FOMC, they announced quantitative easing 3. Okay, so it was a big, whenever the FOMC do a big announcement, so whether it's an end of quantitative easing, the beginning of quantitative easing, whether there's going to be an interest rate hike. So if they decide there will be an interest rate hike, this is where you get huge moves in the market. So really, this could be a big mover in December. Gold and silver skyrocketed 500 and 200 points in less than 3 hours on the September 2012 announcement. September 2013, it was very highly speculated that there would be a tapering of quantitative easing. There wasn't. That sent the US dollar selling off to the downside. We had a huge breakout with gold, 600-point move. More recently, last October, the Federal Reserve ended quantitative easing. Now, bear in mind, everybody was expecting this move, okay? Everybody was expecting the Federal Reserve to end quantitative easing. There'd been quite a lot of talk that the move had already been priced into the market. However, even though there was some degree of pricing into the market, it still dropped 600 points over the next couple of days. You can see there, in fact, 12 hours, it had a huge move to the downside. You can see ultimately we broke down to very key levels of support again. So if we have a similar move, because gold is sitting at the moment at 5-year lows. Now, what you want to remember is typically you will have a technical setup. So you'll be sitting at a key level of support. But what you need to get, so gold has been consolidating now for about 10 days. It really needs a catalyst now. It needs a kick, something to make it sell off or break out to the upside. Typically that catalyst now is either going to come from non-farm payroll next week on Friday. Okay, so that could be a big mover. It could come from the Santa rally as we go into next week, from the beginning from Tuesday the 1st of December, or the big move for gold's going to come on Wednesday the 16th of December. That's where we could see a huge move in the market. Okay, so you do want to have that on your radar. Now, more recently, as I mentioned, October 2015 has presented us with a very lucrative opportunity. In this case, the FOMC, they hinted at a December rate hike. And just because they hinted, and they didn't even confirm it, they only hinted, we saw a 630-point move to the downside. So you can imagine what sort of a move we're going to get on gold if the Federal Reserve do actually come out and confirm a rate hike. We're going to break key support. You're going to see a huge sell-off, and you don't want to miss that trading opportunity. On the flip side of that, if they come out and they don't do a rate hike, you'll see the US dollar sell off, and gold has the opportunity sitting right at 5-year lows to skyrocket, especially as we're now coming in. We could then get a continuation of the Santa rally into the end of December. So either way, we don't really mind which way gold moves. The point is it's at a key level of support, and we've got an opportunity for a big move as we come into the FOMC statement. The other big mover, actually you don't want to miss this as well, it's not just gold. Palladium has moved over 1,300 points. Now, we've still got to sell short on Palladium, which we've been in since this October FOMC statement. We broke key support. Palladium is still consolidating around the 550 level. It's had a really good breakout, but over 10 days, it dropped 1,300 points from the FOMC statement at the end of October. So we've really had some lovely moves. So again, you do not want to miss that opportunity. So essentially, what can you expect from the December FOMC statement? Again, it's released on Wednesday, 16th of December. How would we trade this? Scenario one, if the FOMC confirms a rate hike, that will be bullish for the US dollar. We'll be looking to sell gold. Scenario two, if the FOM confirms no rate hike, we'll see a sell-off on the US dollar and we'll buy gold. That's how we'll be looking to trade this announcement. We'll be trading it live with our traders. We go through exact entry points, exact idea of the setup, exactly looking at is essentially the two main scenarios we will be having a look at. Okay, so there's definitely no shortage of profitable trading opportunities across the commodities market. So what we'll do now, we'll move it on to the binary.com platform. So Michael, that's a really good question as well. And that brings me nicely on to how we look to take advantage of these moves. Okay, so essentially, when we're trading off the binary.com platform, we look for a higher or lower trade. Okay, so if you select higher, you win the payout. If the market exit price is strictly higher than the entry price, if you select lower, you win the payout if the market exit price is strictly lower than the entry price. Okay, now this is a perfect way to trade the market if you want minimal amount of time, or if you don't want to have to put a stop loss on the market. So you can just take advantage of a move. All you need to do is the price to go in your direction over the time frame you specified. You don't need to be sat in front of the computer monitoring the trade, monitoring the take profit target, monitoring your stop loss on the trade. It's very straightforward. You've just got to get the time frame right, the direction of the trade over that time frame. Also, you don't need to have a huge move in order for you to win the whole pack. The trade only needs to break down 1 point and close in your direction, either 1 point to the upside or 1 point to the downside, and you will win the entire payout on the move. Now, where you've seen me give examples of huge moves on the markets, how we've taken advantage of those moves, there is what you will find, particularly on Palladium and Platinum, is the majority of platforms that you trade that off. And I'll be doing my technical analysis on the MT4 platform very shortly, just to show you the technical analysis that we do to enter trades on binary.com. You will find that the spreads that you trade are quite high across a lot of platforms on markets such as Platinum and Palladium. It's perfect for a platform like the binary.com platform, because essentially when you're getting into those trades, you don't have a huge spread on this. You're getting in very nice tight price, and all you need, again, is the price to close higher or lower in your direction. Okay, so we'll move over to that now. I'll just show you some examples of the trading opportunities that we're going to look at tonight. But really great question there, Michael. Thank you for bringing that up. And do keep the questions coming, guys. If there's any more questions, we can definitely go through those during the session. I'm going to go through some of the trade opportunities that I see lining up on the markets at the moment. I'm just going to share my screen and I'll go through some of those trades with you right now. Okay, fantastic. Okay, good. I'm just going to share my screen, so you should see that come up very shortly. Okay, brilliant. So you should be able to see, right now I'm just on oil, so I will move it over, just get all the questions ready. Okay, brilliant. So the market that we are on at the moment is the oil market. Now, what you will note, so we discussed this earlier on the V-shaped reversal pattern, is that oil is forming a nice V-shaped reversal pattern at the moment. Okay, so if you have a look at this overall formation, you've got a previous level of support, which is now turned into resistance, a very key level around the 46.40 zone. Okay, you can see that very clearly. We're sitting right at that level. We've actually got a nice hammer which has formed at that level, been some rejection over today, and it's just building up some pressure here. Okay, you can see that very clearly. I just put a support zone below, and now all I need to do is just draw out the V, which you've got at the moment. You've got a really nice neckline which is formed there, and essentially you've got a lovely V-shaped reversal pattern, and you can just look for a breakout trade at that point there. So that to me is signaling that oil is forming a base here. All it needs now is confirmation. So if we get a break above 46.50, I would suggest just giving a little bit more room there, either tonight or tomorrow. That is a trading opportunity right there on Brent crude oil. We can look to go for a buy, for a breakout trade to the upside. So definitely that is a really nice V-shaped reversal pattern in formation there. We've also got a similar situation on light sweet crude oil. You can see where we've had a previous level of support on the market has also become a level of resistance. You can see where we're building up a base here on oil as well. You can see over the last 3 days, we've had some quite strong moves to the upside, and we're also starting to build a base. We've got a very clear neckline sitting around 43.50. So why is this important? It's important because when a market bottoms out and it starts to base, it forms a V-shaped reversal pattern, and you need to be aware of that. You need to know where the neckline is of that pattern. You need to be able to recognize these patterns in the market and recognize where you're looking to take an entry. And we're looking for an entry for the price to be higher on a breakout just above key resistance here on light sweet crude oil. Now, moving on, I do have a trading opportunity right now, trade idea, which is a trade that we are currently in at the moment, and we can actually add to this as well because we are still continuing to break down for the gold market. So remember, around this time of year, around Thanksgiving, and as we head into Black Friday, what tends to happen is especially you get a lot of sentiment to the upside in the US dollar and in the US economy overall, as we see a lot of spending over the holiday season. Thanksgiving is tomorrow, but then you've got Black Friday, which is where you've got the online, where you've got all the retail sales. On Monday, you've got Cyber Monday, which is where you've got all the online sales as well, where if we start to see record sales be broadcast, particularly, I'm looking out for Amazon, actually. So Amazon could be very interesting to see the sort of record sales that they come out with. We've just seen Alibaba at the beginning of November, on the 11th of November, came out with their best ever sales to date on their Singles Day, where they do a Singles Day promotion on the 11th of November. They hit record sales. I would not be surprised at all to see Amazon do some similar figures and really break all their previous sales records. Amazon are really pushing it hard. If you shop on Amazon online, you have a look at all the Amazon Black Friday deals. They're pushing really hard, and I wouldn't be surprised to see they get record sales, and that this could really help particularly stock markets, and also we could see some good strength on the US dollar if we see strong consumer spending and retail sales. So the inverse correlation we would look out for is more pressure, therefore, on the metals. So right now, I'm looking for a sell. In fact, I'll happily take another trade on here for a sell on gold. I'm only looking to be in and out of this in the short term now. See what I can get in terms of the time frames here on binary. So we'll probably look to be in and out of that in a couple of days. We'll see when we can come out. Yeah, that's perfect. So if we can be in and out of this, I'll bring the trade up in just a second. Excellent. There we go. So essentially, I'm looking to be in and out of this gold trade. So I've just selected metals, gold, start time now, duration 2 days. I want to be in and out of this trade by Black Friday. I want to close the position by the end of Friday. Then next week we'll start potentially gearing up for the Santa Rally. I could extend it by 1 day further into the end of Cyber Monday, but I'll just close out the position, have it all squared off by the end of the week. So I'll take a sell short. The actual payout on that is really good, 102% payout for a sell short. So my deposit on the trade is $1,486 for a $3,000 payout. And Michael, as you very correctly pointed out, we only need to close 1 point lower than our entry price in order to win the entire trade, 1 point or 1 pip. So this is a lucrative trading opportunity, in my opinion. So I'm going to take this trade on. It is for start time now, duration 2 days. Need to be in and out of this trade by Friday. I'm going to take the price $1,070.39. Just get a quick update on that. My deposit on the trade, $1,486 for 102% payout. So let me just do a quick refresh. Got a better price actually at the moment. So I'll take that. Beautiful. That has been done. So I've gone in for a sell short on gold. I just marked that on my chart. You can see where I just entered for a sell short. Ultimately, on gold here, we're continuing to ricochet between key support and resistance. Okay, we've come up to resistance several times, come back down to support. Now we're ricocheting around the lower end of this zone. What I would anticipate next, because we've tested resistance and not been able to really break above that zone, is just we're holding on to resistance. I would expect now a nice little sell-off and a breakdown. Once we break through this week's lows, we get a nice rotation low and come back down to around the 1,050 zone. That could be a really lovely sell-off for gold. So that's what I'm looking to take advantage of. So gold, I like for a sell short at the moment. The US dollar, you can see we had another surge higher today. It's had another breakout. In fact, the US dollar today has cleared above. Let's have a look where we got to today. Yep, we haven't been this high since April 2015. Really nice breakout today, the US dollar. It's no surprise there to see a bit of profit taking once it came up to the 100 level. It is struggling a bit with the 100 level to stay above that level. I suspect the next big move that we get above that level, if we break and close above it, that will really start to pick up momentum for the US dollar. We'll see how we close today on the US dollar. Still got a couple of hours to go. You can see here the US dollar just today broke out again to about 7-month highs here. Okay, so really important. The US dollar is the benchmark you want to trade commodities against. So gold is sitting at 5-year lows. If the US dollar continues to break out, that will send more weakness for the precious metals. So if we have a look at silver, silver is just sitting around key support. I suspect this is going to be a case of silver's just going to flush at some point. If it breaks down again, it will just flush out all the stop losses and we'll see a really big move to the downside, particularly if we get a break and close below $14 an ounce. Right now, as silver continues to ricochet and dance around this support zone, I would still wait. We might be forming a V-shaped reversal pattern. Again, as we head into next week, I am looking to take advantage of some basing. If the metals don't break down any more than they are at the moment, again, go out to the CFTC report, show you the net long positions are at record levels now by the institutions, fund managers and so on. They're all looking to go short. And from a contrarian point of view, when you have too many market participants all in the same direction, this is typically where you'll actually bottom out and you get a reversal. So keep an eye out for this V-shaped reversal pattern, okay? We've got a potential for a V-shaped reversal pattern. It's a pretty good buy here for silver from $14 an ounce. If it rallies from this zone, we could see moves right back up to the upper end of the resistance channel throughout the Santa rally. You've also got the January effect, which we'll probably discuss actually in the January webinars when we rejoin you for the Commodities Corner on Friday, the 8th of January. So be aware of that. We'll be looking to take advantage of the January effect as well. But have a look at this. Silver is basing right now, but it's a little bit more indecisive. If it breaks and closes below $14 an ounce, you could see a big sell-off to the downside. It's not quite there yet. It depends. We probably won't get too much volatility over the next couple of days during the US session. It's going to be more dependent on the Asia Pacific session and the London session, obviously with Thanksgiving and Black Friday. They're both US bank holidays, so we could see just limited, we could see less movement to either direction. But as we head into next week, I definitely expect some explosive moves. So silver, I don't see a setup just yet. I do note that palladium is basing. So palladium has come back down to 525. It came really close to breaking support. It's the third bounce, actually fourth bounce off this level. So there's obviously buyers sitting at the 525 level for the palladium market. What did we discuss at the beginning of the session? Monitor key support and resistance level. This is a very key support zone. If it doesn't break, it means it's been bought. So at this zone, traders are getting into palladium at this level. Palladium is very overextended to the sell side. Palladium broke down from the FOMC statement, which is just up here, which we've been shorting, broke down over 1,400 points to the downside. Huge move. So it could be a double bottom here for palladium. If it is, it could represent a good trading opportunity. We might well trade that as we head into next week. You can see here, nice little rejection candle forming again off the 525 zone. So if that holds, if we get a nice Santa rally, you can imagine the kind of move we could get on palladium. Let's see whether we can get some nice trend lines going here on palladium. So we'll take this 3 bounces here. We'll ignore this big spike to the downside, but just look at the close there, because you just want to pay attention to the close. We'll also bring on some trend lines just from the left of the chart. There we go. There is a trend line. So what does that mean? It means if we rally with palladium from here, where could we rotate up to the upper end of the trend channel? How much would that be in terms of points? We need to be aware of the points. There could be multiple open positions we could take on this. 1,200 points potentially. I'd say round it up to about a 1,000 point move potentially to the upside as we enter the Santa rally and as we come into the January Fed next year. There is potential. If this is the bottom at the moment, it's always difficult to pick a bottom, but what you want to use is your technical analysis skills. You want to be looking out for V-shaped reversal patterns and double bottoms, consolidations. You want to be looking for major levels of support. We've definitely got that on palladium at the moment. There's a nice little box which is forming on this consolidated box. If we break above resistance of this box and close above it, there could be a very nice buying opportunity there for palladium. So keep an eye on that market. Some good opportunities potentially coming up. Platinum is starting to base a little bit. If I bring you out to the weekly chart of platinum, there's a very similar trend channel on platinum to palladium where it's not really able to follow through much past support. So I suspect we could actually be on here for a good rally with platinum as well. It's worth keeping an eye on. It's not quite ready yet, but it's starting to get there. However, with gold, I see something different. I see where we stand at the moment, we could get another wave lower. I suspect with gold, what we'll get, if we can break key support here, is just one flush lower one flush lower to the lower end of the trend channel, and then breaking out to the upside from there. Then we could really see some sort of capitulation around that zone. But I do feel that gold right now has still enough in it to break down for one last wave lower before we enter into the Santa rally. And oil as well, let's take a look at oil again. Yeah, oil's looking good, but it's not quite ready yet. Oil, it looks like it's going to be ready for a trading opportunity either tomorrow or on Friday. And, of course, we've got the Commodities Corner on Friday, which you are more than welcome, of course, to join us for as well. Okay, fantastic. So what I'll do now, I'll just take you back to the main presentation. Again, for those of you who just joined a little bit later in the session, the trade that we've taken there is a sell short on gold to be in and out of that trade by the close on Friday. Okay, that is the sell short that we have taken at the Gold and Silver Club on gold at the moment. Okay, fantastic. So in fact, I'll tell you what I'll do. Let me bring you back to the main presentation. We've gone through live technical analysis. If you would like more daily commodities analysis and live trading ideas ready to implement on binary.com, let me just bring my screen up again just so I can share with you a little bit more detail on the Private Traders Club. I get a lot of great questions on the Private Traders Club. So let me just show you exactly what the Private Traders Club is. If you go, in fact, I'll put the link in the chat in just a second for you, just so you can have a look. You can actually view this at the same time that I am. Okay, so all it is, it's www.theprivatetradersclub.com. Okay, great. If you go to that link, you'll be able to see exactly what I'm showing you just on my screen at the moment. Okay, and I'll go through exactly what the Gold and Silver Club Private Traders Club is. Okay, so it is for beginners to advanced levels. Okay, so it caters for all levels, particularly if you are new to trading and looking to develop a solid understanding of trading and fast track your results. You want to start off with a Master the Markets trading course. Okay, so this is the Gold and Silver Club signature Master the Markets trading course. It's designed to give you a very thorough understanding of commodity markets along with the proven fundamental and technical trading strategies. These are the exact powerful trading methods that professional traders use, investment banks use, hedge funds use around the world for their daily trading activities. It's one of the most comprehensive commodities trading programs available anywhere in the world to teach you everything you need to know to become a consistent trader for trading the commodities market. So even if you're an experienced trader and you've hit a plateau, you want to take your trading to the next level, you would like to learn more about the commodity markets, how they move, how best to trade these markets, how the institutions trade them, how the hedge funds trade them, it's definitely the right thing for you. We also get a lot of traders who've come to us who've tried to trade by themselves. They've lost a lot of money in doing so and doing it the wrong way, and they're looking for some professional support, mentorship, which is exactly what you get at the Gold and Silver Club. A lot of the times you actually just need a mentor to help you keep you accountable, ensure you're doing all the right things to achieve the success you desire. Whatever it is you wish to be good at, just having a mentor, having the accountability, having a supportive group is very, very important for you. Okay, and definitely we find a lot of trading can be a solitary activity. Trading by yourself, you can feel alone, a bit lost. You wish you could interact with other traders. That's exactly what we've got at the Gold and Silver Club. You're part of a community of successful traders at the Private Traders Club, and it really suits a lot of our international community. As well as access, of course, to the community, you get live trade setups from our forum, where you can access daily access to highly profitable trade setups across the commodity markets. That includes precious metals, energies, agricultural markets. Every trade is shared on the forum, includes our exact entry, exit points, profit and stop loss targets that we're looking to take on those trades. Everything is laid out very clearly, makes it very easy for you to act and get good, very quick implementation on those trades. The inside track is the week ahead trading plan. So every weekend, the private members get access to an exclusive inside track. So very much like we're going over the preparation at the moment for you to take advantage of the Santa rally. Okay, so we've got coming up at the moment Thanksgiving, Black Friday, Cyber Monday. We've been trading the markets for years. We know what to anticipate each time of the year. We go through prep. We'll be doing similar prep next week for all of our traders to trade the ECB on Monday, to trade also non-farm payroll next Friday. We'll be trading also the OPEC meeting on Friday, the FOMC statement. We prep everything. A very important part of being successful in trading is preparation, and we do that. So we take all that work sort of off your shoulders. We prepare everything for the week ahead. We provide you with all our analysis, all the profitable trade setups, chart analysis, commentary that we've got for the week ahead, and you get that in a video every single weekend. So you're prepared for the week ahead. You've got the exact plan, and you can know what to anticipate for the following week. And of course, you get access to live technical analysis videos. So you get access to our live trading webinars, so where we trade as well the news live, such as non-farm payroll, the FOMC announcements, and you also get access to our live trading rooms throughout the week, where we go over our trade setup. So we really go in a little bit more detail as well. We talk you through the trade ideas step by step, the reasoning behind the trades as well. So they really help you understand, implement the Gold and Silver Club's live trade setups with a high level of accuracy and precision to make sure you get consistent results. Okay, so that is the Private Traders Club. If you would like to enroll, we have got, I would say, because we have got non-farm payroll coming up next week, OPEC as well, and also the FOMC statement. If you want to make sure you've got enough time to trade those announcements with us, you do need to enroll quickly. You need to enroll ASAP. And very simply, all it is just enrollment. Just go to enroll here now. And from there, you'll be taken to the enrollment page, very quick for you to complete, and we will get in touch with you ASAP. Okay, fantastic. So I'll just double check. I don't think there's any more additional questions at this point, guys. Again, if you would like to just see everything which I've just shown you, it's just www.theprivatetradesclub.com. I will just double check if there are any more questions at all. No, I think that's it, Sharice. So with that, guys, it's been a pleasure. I look forward to seeing you on the next one. For those of you who will be making an application to the Private Traders Club, I really look forward to working with you, and I'll speak to you all soon. Okay, thanks, guys. Have a great day. Cheers. Bye-bye.